So we'll start with the value of supply in this class. Section 15. What are the supply done by supplier to the recipient? There may be chance of manipulation for the supplied item, supply of goods or services. Consideration, say 1,000 rupees. Now the question is that 1,000 rupees is a genuine one for the taxability or not? Do I want to do some plus or minus with this to find out the tax liability or on the 1,000 as it is? Okay. So this one page is enough for making you understand the value of supply. This one page. Clear? Now, supplier, recipient. Supply of either services or goods, for that the consideration transfer from R to S, say 1,000. And this 1,000 is final as well as it is at the time of supply. If the time of supply is also be correct and then the consideration is final, this is called sole consideration. If these two conditions satisfied, then the value of the supply being 1,000, you have to levy the tax on this 1,000. Is that okay? So value of supply of goods or services are both transaction value paid or payable, the value at which it is transferred. This is called transaction value. This is called transaction value. That is final. Provided two conditions should be satisfied. Number one being sole consideration, another one is unrelated party. Unrelated party. Supplier and recipients are unrelated. Okay, condition 1 and condition 2. Apart from that, condition 1 and condition 2. Apart from that, this will be as per the time of supply. If the transaction value is sole consideration and between these two parties there is no relationship. For example, supplier and recipients are associate companies and related party, then goods may be transferred at free of cost also. Then how can we calculate the tax? We have to find out the tax for the value, right? So the value is the problem critically here. If the value is 0, then how can we determine? So you have to go for following these steps to find out the values. Is that okay? In the absence of value being not as per this condition. You might have studied that section schedule number 1. Supply even without consideration also be considered as supply. Taxable, right? Because if the transaction happens between the related party, usually transaction value will be 0. Or it's mutually adjusted, yet that will be considered as supply. Then how can I calculate the tax value? Then the value will be calculated as per the steps given under this section, section 15. Now what is called unrelated? Supplier and recipient should not be a related party. And what is called sole consideration? Sole consideration is nothing but the only one consideration transferred between S and R, being this 1,000. Sometimes what happens, supplier supplies the goods or services, for that rupees 1,000 is paid. Apart from that, a supplier has compelled R to pay 500 rupees to Mr. X. So if R wants to get this goods or services from S, he has to obey what S says. What S says, give me 1,000 rupees, give another 500 rupees to X. Then what is the consideration? 1,000 plus 500, 1,500 will be the consideration. It is not 1,000. It is not 1,000. Now, what happens, sir, in case of taxes, duties, cesses and fees, any other charges? All these things should be includable except GST. We are supposed to calculate the GST. Because of this reason, leaving the GST, whatever the other taxes applicable for the manufacturing of the goods is also forming part of the value. If it is not included, you have to include. Amount payable by supplier but paid by recipient. Okay, this one also. For example, supplier and recipient, supply of services and goods. Out of that, X purchase some material from X for manufacturing this item, and the consideration transfer from recipient to the supplier being 1000, but for this material purchase, supplier has not paid any money for this, and asking R to pay this money. Sir, you go and pay this 500 rupees, sir. Now what is the consideration value? 1000 plus 500, 1500. This material payment will be done by this supplier because he only procured, but asking recipient to pay for any dues payable by supplier, then that will also be forming part of the consideration. So 500 plus 1000, 1500 will be the value. Apart from that, any incidental expenses before delivery. What does it mean? From this place to this place, while transferring, you need to incur some other costs like transport and any other testing costs and payment costs and insurance costs, packing and secondary packing, any wages payable for handling this while transporting from here to there. All these things should also be included. What are they? Commission, packing, and the recipient demanded the item that you deliver should be 100% perfect. So before you deliver, cross verify whether it is suitable for consumption or not. If there is any problem, you have to take it back there itself, don't deliver to me. Sir, for the inspection there is an additional cost. Okay, I am willing to pay for that one also. Now the consideration being inclusive of the inspection charges. And some certification charges, like if you purchase any gold chain or ring, you expect what? BAS standard hallmark signature will be there, right? So with that hallmark signature, you confirm that the purity being 916. So you ask them, give me certificate also. Then for the certification, there's a charges, means that should also be forming part of the transaction value. And the asset transferred from, the goods transferred from supplier to the recipient should be installed at recipient's place, means that installation charges, and testing charges also be includable. Sometimes to cross verify the weight is correct or not, weighment charges also be there, and loading and designing charges will also be there. These are called incidental expenses. Without these expenses, we cannot deliver the goods in the hands of the recipient. So all these things are incidental expenses. Is that okay? Now what happens in case of interest, late fee or penalty for delayed payment? That should also be added. Already we have studied. Is that okay? So what are the things you have to understand? The value of supply is nothing but the transaction value, the value accepted between the two parties, provided that that value will be directly taken, provided these two parties are unrelated and sole consideration, no doubt. In case, what happens to taxes, duties, cess and fees, all these things should be includable, but except GST. And apart from that, any amount payable by the supplier, by asking the recipient to pay the dues on behalf of the supplier, then that is also be includable in the transaction value. And any incidental expenses related to the delivery will also be includable. So they are being commission, packing, inspection, certification charges, installation, testing charges, weighment charges, loading and designing charges. If the payment is delayed, then automatically a penalty will be leviable by way of interest or late fee or penalty, whatever it may be, that should also be includable. And we have the two subsidies, right? So already we studied this along with the consideration, right? What's that? Subsidies may be payable by central or state government, or sometimes it may be other than central or state government, okay? In case of central and state government, then this will not be includable. In case of subsidies payable by the others, should be includable. That we have already studied along with the consideration chapter. You can recollect this, okay? So, supplier, recipient, supplier supplies the solar panel, and for that our recipient makes a payment of rupees 1 lakh. Apart from that, Government of India also makes a payment of rupees 50,000 as a subsidy, 0.5 lakhs. Now what is the consideration? The consideration being only 1 lakh. This 50,000 will not be part of consideration. If the payment subsidy is given by other than Government of India, then 1.5 lakhs will be the consideration. So subsidies provided other than central and state government will be addable. Subsidies provided by central and state government will not be addable. If it is included, you have to exclude this. Is that clear? Now, apart from that, we have two more things. Discounts. Okay. So in case of discounts, we have discounts like what? We have discounts like cash discount, right? So here I name this being staggered discount, and any other discount, but is included in tax invoice, provided the discount will be given only if condition satisfied, if condition is there. And secondary discount. Staggered discount is nothing but buy more, get more. Okay, buy one free. Okay, get one free. This will be always be excluded. 100 rupees, another one is also 100 rupees. If you buy this, this will be free, means your consideration being only 100. This is excluded. In case while selling in tax invoice, there will be a condition. Note, the total purchase value in this year exceeds 10 lakhs. You will be given 5% commission. This purchase value for the entire year. Exactly in March 2026, the last month of this financial year, he crosses 10 lakhs and demands, sir, as your statement, I crossed 10 lakhs, give me the 5% discount. So automatically for the entire sales put together, 5% commission, 50,000 is given the last month. Can it be deductible? Yes, because this discount is already stated in the tax invoice itself, but achieved only in the last month. He starts purchasing January 1 lakh and February 60,000 rupees and probably April, May, June 1.5 lakhs. Like this, he starts purchasing slowly. Exactly in the month of March, he crosses 10 lakhs, immediately he gets a discount. So the discount is applicable for these purchases also be deductible from the transaction value. But if the supplier reaches more than 100 crores turnover, in order to celebrate that 100 crores turnover, they call for all their buyers to get a discount. Or they reached 25 years of service. In order to celebrate, they offer some discount as they wish. There is no any such a conditions available in the tax invoice. Then this is called secondary discount that will not be deductible. That is also forming part of the consideration. Hope you will be now able to understand. Staggered discount excluded. If it is included, then you have to subtract. In case of agreed term of discount means it is already given in the tax invoice. At the time of sale itself, I have stated on satisfaction of this condition, you will be eligible for claiming the additional discount also before the time of supply. Periodic, year-end, volume discounts, like all these things will also be excluded, but if ITC is available, that should also be reversed. And in case of secondary discount not excluded, that should be forming part. Is that okay? So hope you'll be now able to understand all these cases. What are they? Value of supply will be equal to the transaction value, provided if the buyer and sellers are unrelated and the consideration sold, then no problem, I'll take as it is. If it doesn't include taxes, duties, cesses, and you have to add, provided it should not applicable for the GST. And in case any amount payable by supplier but asked the payer, recipient to pay, that should also be forming part of the consideration, so you have to add. And all the incidental expenses before delivery should also be includable, like commission, packing, inspection, or certification charges, installation and testing charges. All these things should also be includable. In case of delayed payment, any penalty, late fee, interest is charged, that should also be forming part of the consideration. In case of subsidiaries other than central government subsidiary will be includable. In case provided by central government, it should not be includable, excluded. In case of discounts, we have 3 discounts. One is staggered, another one is at the time of supply itself, the statement given, if you satisfy these conditions, you will be eligible for the discount. That is called agreed term of discount before supply. That also be excluded. And it may be based on some periodic discount or year-end or volume-based discount. If you cross certain volume, you will be eligible for this discount, will be deductible. But ITC is availed means you have to reverse this. In case of secondary discount, not excluded, that should be includable. Okay. Now, value can be determined under prescribed method if value cannot be determined under the above method. If above method is not possible, then we have to follow some other method also mentioned in the income tax, means GST rules, right? Now come on. We try to solve the illustrations on value of supply, section 15. Wholesale price for 1 metric ton of cement sold by X Limited in the ordinary course of business is 7,000. Price charged by X Limited to Y is 6,700. So now the question is X to Y, supply of goods, consideration being 6,700, but market price is 7,000 rupees. Now, are they related party? Unrelated party only, sir. Next one is it sole consideration? That's also sole consideration only. There is no any other consideration transferred between X and Y other than this 6,700. Then this one is final. So 7,000 is the market price. Doesn't matter for the trade negotiation. There will be changes in the price. Somebody may ask for the discount, and because of its long-term nature of transaction, of course the transaction value may be lesser than the reported value because of the relationship, not because of the relationship. Then of course it can be considered as 6,700 only. Levy of intermittent tax, okay, is not subsumed, is not includable. So what you have to do? You have to include this. Why? All the tax will be includable except GST. As per the rent contract, tenant required to pay local taxes for the premises. So the local taxes payable by the landlord only, but landlord demanding the tenant to pay the rent means the rent paid plus the local tax should also be forming part of the transaction value. It should be includable. Is that okay? Mr. A goes to Dumbro Furniture Outlet and buys furniture for rupees 2 lakhs. Mr. A asks for the special packing for which 5,000 is charged for the packing. So what happens is special packing. Incidental charges. Okay, it should be delivered to your place means I had to do special packing. It costs us 5,000 rupees. Unless it is spent, the delivery may not be perfect. So you have to include this. Packing charges should be includable. So 2 lakhs 5,000 will be the value here. A supply price to 2,000 is made with a credit period of 1 month. For payment is received after the lapse of 2 months from the date of supply. So what happens? The credit period being 1 month. Okay. Now, here what happened, the payment received after 2 months, so 1 month delayed. Because of that 1 month delayed, 12% interest per annum is charged. So 2,000 into 12% per annum for a month it is 20 rupees. So 1 month after the credit period, 20 rupees is charged. What about this one? This should also be includable. Any interest late fee for the delayed payment should also be includable. So the value being 20,020. But in case of this one, time of supply being payment. In case of this one, time of supply being what? Invoice date or receipt of payment, between these two, whichever is earlier. Is that okay? We have already studied in the time of supply. So you have to link the time of supply and this chapter here. Okay. In case of any delayed payment, that payment we are not sure whether he will pay or not. So if he pays within 20 days, 1 month, we are not sure that this will be applicable. But if he pays 2 months later, only then this 20 rupees is applicable. As we are not aware about the situation, this will be taxable only at the time of real payment as per the time of supply we studied in the earlier chapter. Now, selling price of notebook is 50. For notebooks sold to students in government schools, the company uses CSR funds to pay to seller 30. So supplier and recipient, notebook is sold, supply of goods. For that, students are paying only 20 rupees. Balance would be payable by CSR fund. Now what is the value? CSR fund is a subsidy received from non-government entity. So automatically 20 plus 30, 50 will be the value here. Okay, 50 is the transaction value here. Royal Biscuit Company gives a discount of 30% on the list price to its distributors. Thus, for a carton spice picks in the invoice, the list price is mentioned as 200, on which discount 30% is given to arrive the final price being 140. So this is a normal discount. The discount already stated before the time of supply itself. So before the time of supply means 140 is the final transaction value for this purpose. You no need to worry about considering that 200 rupees. The agreement of Raju Electrical Appliances with its dealer is that sale of rice cookers over 100 pieces in the Diwali month will entitle them to a discount of 5% per cooker sold to them in the next month. So they will start buying the rice cookers now and then, but the condition is if you cross 100 rice cookers sold in this year, next month you will be getting the discount. Can I deduct this? Yes, this condition already available, so it is also be deductible. This is deductible. Is that okay? Discount is excluded from the transaction value. A company announces turnover discounts after reviewing dealers' performance during the year. So the turnover discount is they decided based on the performance reviewed themselves at the year end. The discounts are based on the performance slabs or given as a cashback. There is no such conditions already available. So it is not considered being deductible item. It should be includable for the value. Is that okay? Hope you will be now able to understand all these cases. Now, next question. Grand BIS contracts with ABC to conduct a dealers meet. Okay. Grand BIS. ABC company. So, conduct a dealers meet. So, Grand BIS is now is the supplier of services. What services? ABC company limited wants to conduct a dealers meet. Rather than conducting dealers meet themselves, they just approached event manager. So here Grand BIS is the event manager. They are conducting this business meet on behalf of ABC Company Limited. In furtherance of this, Grand BIS contracts with vendors to deliver goods and services like water, soft drinks, audio system, projector, catering, flowers, etc. at the venue of the stipulated dates. So what happens here? They will be providing what? Water, soft drinks, audio system and projector, catering, flowers, etc. Okay, these are the things are supplied by Grand BIS. Okay, and Grand BIS is liable to make these payments as contracted. Now all these things are supplied and consideration being only one, right? So this is what about the supply of services. Supply of services, for that consideration is payable. And these are purchased by various vendor and Grand BIS is liable to pay all these values. So they procure it from outside and they will supply this to whom? ABC company, and consideration is now received from ABC. Okay, from ABC. Soft drink supplier wants payment upon delivery. This fellow wants the money to be immediately paid on delivery itself. Once the goods deliver, he wants the payment. ABC company agrees to pay the bill raised by the soft drink vendor on Grand BIS. So this original bill is on whom? Grand BIS only, but anyhow ABC made the payment. ABC made the payment. Now this amount is not billed by Grand BIS. So while billing, Grand BIS recovered say 10 lakh rupees. The soft drink bill is separately paid. So this 10 lakhs is for this one miscellaneous, not for soft drinks. Now this 1 lakh is payable by Grand BIS only, but instead of the payment made by the Grand BIS, asking the recipient to pay, then that will also be forming part of the value. So the overall value being 11 lakhs. This amount is not billed by the Grand BIS to ABC Limited. Is the amount includable in the value of supply? Yes, it should be includable. Now, we'll move on to the next one. Let's see. Black and White Limited has provided the following particulars relating to the goods sold by Colorful Private Limited. List price of the goods exclusive of taxes and discounts. Of course, you have to start with 50,000 rupees. Tax levied by municipal authorities on sale of such goods, of course, any taxes will be addable if it is not being the GST. As it is not being the GST, it should be includable in the transaction value. CGST and HGST is chargeable on the goods, it is not going to be includable. Packing charges not included the above price, but you have to include this one also, 1000 rupees. Is that okay? Black and White Limited received 2000 as subsidy from NGO on sale of such goods. So subsidy, okay, from NGO, non-governmental organization, not from the government. So this 2000 should be includable. And the price of 50,000 of goods is after considering such subsidy. This 50,000 is after subsidy only. So you have to add that 2,000 also be part of your consideration. Black and White Limited offers 2% discount on listed price of the goods which is recorded in the invoice for the goods. So minus discount. Discount 2% which is already given in the invoice itself. If it is given in the invoice, it should be subtracted. So usually if it is given as a 2%, only from the listed price you have to give the discount. So the value being 2,000 rupees. Is that clear? This is deductible item. From 50,000 you have to calculate. Determine the value of the supply. Come on, what is the value of the supply here? Huh? This is 1,000, right? Yeah, 1,000. Then 57,000 will be the value of supply. Now let's move on to the next one. Samriddhi Advertisers conceptualized and designed the advertising campaign for a new product launched by New Moon Private Limited for a consideration of rupees 5 lakhs. Consideration. Being 5 lakhs. Samriddhi Advertisers owed 20,000 to one of its vendors in relation to the advertising services provided by it to New Moon Private Limited. Such a liability of Samriddhi Advertisers was discharged by New Moon Private Limited. The other's liability is paid by him. Okay. Supplier's liability is paid. Supplier's liability paid by recipient should be forming part of the value. Delayed the payment of consideration and thus paid 15,000 as interest, assuming the tax rate being 18%, right? So you have to add the interest for the delayed payment. So the final value being 5,38,000. In case of interest only, no, we have the other approach also. What is that? Let's see. 5,20,000 rupees. We assume this amount paid 15,000 represents payment for interest and applicable GST also. Okay, that's how we can assume that interest 15,000 paid means the ultimate value you receive being inclusive of GST. So I need to find out only the value exclusive of GST. So if the value being 100, applicable GST being 18, then final value payable being 118. Here 15,000 paid means it is inclusive of GST payment. Then what could be the value here? You can do the cross multiplication to find out the value exclusive of GST, which is 12,712. So 12,712 is the another approach. The final value being 5,32,712. Because the statement related to the interest being paid means the final payment. We are not sure whether it's only payment inclusive GST or exclusive GST. So sometimes it may be shown this way in the text and sometimes it is shown this way also in the text. So you no need to panic with this difference. You can have these two assumptions also. In this case, you assume this interest is exclusive of GST. Here, assume that 15,000 inclusive GST. So I have removed the GST. Here it's 15,000. Sorry, 15,000. Right? Clear? These are the two assumptions you can do. So all the content over, we'll go for solving some practical illustrations to master this chapter. It's one of the easiest chapters. Value of supply. The entire value of supply is over with this one page itself. This one page is enough. Clear, easiest chapter. Now come on, try this. Sharp Minds Institute provides coaching for engineering entrance examination. Monthly fee charged by the institute from a student is 10,000 rupees. The institute is known for its commitment to provide education to underprivileged children. It trains 10 students every year for entrance examination free of cost. Right. The institute has received 3 lakhs as coaching fee during a month. Now Jeevan, an NGO working in the area of education for underprivileged children, has given a subsidy of rupees 10,000 in lump sum during the month to the institute, as it is serving the cause of underprivileged children. For the underprivileged children, NGO has given what? 3 lakh subsidy. It is not subsidy from the government, so it should be includable. Determine the value of the supply of education services made by Sharp Minds Institution during the month. This 3 lakhs will always be includable. Apart from that, any amount collected will also be forming part of the supply. Is it clear? Now, Furniture Wala is a chain of retail showroom. Furniture Wala, okay. Furniture Wala. A chain of retail showrooms selling both modern and classic furniture. In order to build a strong customer association, the showroom provides free delivery of the furniture at the premises of the customers if the distance between the showroom and the customer's premises is up to 20 kilometers. Okay. So, Furniture Wala to the recipient. If the distance is less than or equal to 20 kilometers, okay, whatever the transaction value charged, but transport charges will be 0. Freight being 0. Is that okay? And where the distance is more than 20 kilometers, showroom charges a concession freight of rupees 10 for every additional kilometers. If the supply happens beyond 20 kilometers, then what happens in this case? Transaction value for the freight, whatever the distance may be in excess of 20 kilometers, no, for that for every kilometer 10 rupees is charged. This will be the transaction value. This will be the transaction value. If the distance is within 20 kilometers, the delivery is free. If the distance is beyond 20 kilometers, okay, in excess of 20 kilometers, whatever the distance, probably if it is 35 kilometers, leave the 20 kilometers, again, remaining 15 kilometers, no, for that every kilometer 10 rupees is recovered. So 15 into 10, 150 will be recoverable. Right. Mrs. Leena Kapoor purchases a double bed, a dressing table and a center table for rupees 2 lakhs from Furniture Wala. Miss Leena gets free delivery of the furniture as her residence is located as a distance of 18 kilometers only. So, first case being Leena Kapoor. In Leena Kapoor, the transaction value being 3 lakhs and the distance is 18 kilometers only, so freight is 0. Determine the value of the taxable supply made by Furniture Wala. Then, the showroom incurs an expenditure of 1,000 for delivering the furniture at Mrs. Leena's residency. For this, Furniture Wala incur 4,000 rupees. Doesn't matter. What is the final value recoverable? The transaction value is final, provided if it is being the sole consideration and these parties are unrelated, this is final. You no need to do any more adjustment. 1,000 rupees incurred is considered being a part of this 3 lakhs itself. Okay. We have answered change in the residence of Miss Leena is 50 kilometers. In case if Leena's home is almost 50 kilometers distance, then 3 lakhs is for the TV. So 2 lakhs is for the TV. 2 lakhs only no here. Sorry, this is 2 lakhs. And here it is being 2 lakhs. 2 lakhs. And distance is 50. Actually, up to 20 kilometers, no amount will be leviable. Beyond that, for every kilometer, 10 rupees is recovered. So, 30 into 10, 300 rupees is additionally be recovered. So, 2 lakhs 300 will be the consideration here. This is what about the value of supply. Clear? Okay. Shall I move to the next one? AKJ Food Private Limited gets an order for supply of processed food from a customer. The customer wants a consignment tested for gluten. So here tested. Gluten for specified chemical residues. AKJ Foods Limited does the testing before the supply and charges a testing fee also for the same for the customer. Okay. AKJ Foods Private Limited argues that such a testing fee should not form part of the consideration for the sale as it is a separate activity. Is the company's argument correct? No. It should be, testing fee should be addable because it's incidental expenses for delivery. Unless you finish off the testing, you will not accept the goods. Okay. So to deliver itself, you have to do the testing fee. So delivery is confirmed only after the testing. So testing is a part and parcel of the delivery. So it should be includable as an incidental expenses. Is that clear? Now, a philanthropic association makes substantial donation each year to reputed private management institution to subsidize. Subsidy is given by private philanthropic association, not government. So whatever the subsidy given is also forming part of the consideration. Of low income group students who have gained admission there. The fee for these individuals is reduced, thereby coming to rupees 3 lakhs. So institution and fees recovered being 3 lakhs. And compared to 5 lakhs, another 2 lakhs may be from philanthropic association. Then what about the value? 5 lakhs will be considered as total consideration in this case. Clear? That subsidy will also be forming part of the value. Now, Mazda banners. An advertising firm gives an interest-free credit period of 30 days for payment of customer. Its customer ABC paid for the supply 32 days after supply of services. So 2 days delay. Okay, Mazda banners waived the interest payable for delay of 2 days. So now what happens? For the 2 days, the interest will be leviable. No, as per the mutual trade agreement, they waived the 2 days interest. Okay. The department wants to add interest for the 2 days as per contract. You already studied that in case of interest, late fee or penalty due to the delayed payment will be taxable only on payment basis. If the payment is waived, nothing will be payable. Okay, it is only this one. In case of original value, on accrual basis you have to levy. But in this case, it is payable only on the basis of payment. As the payment is not there, you no need to include. Okay, so hence excludable. This is excludable. Clear? Only for this, right? You can write it this way also, on payment basis. This one only on payment basis. For the rest, it will not be applicable. Now, French Bakery Products Limited sells biscuits, cakes through its dealers, to whom it charges list price minus standard discount and pays GST accordingly. When goods remain unsold with the dealers, it offered an additional discount on the stock as an incentive to push the sales. So, bakery, if it is not sold within the date, then it will be stale only, right? So, usually for 100 rupees, they offer 30% discount. 70 rupees is the normal transaction value. Okay, if 100 units were transferred, 70 sold and remaining 30 units remains unsold. Then in order to push this, from that 70, another 30 rupees also discount given. 40 rupees in the night, they say sold the cakes at much discounted rate as is going to be stale in the coming days. Now, what is the transaction value? Is it 70 or 40? This additional discount is not applicable before the time of supply. It is decided based on the final moment. It is not given at the time of supply. Can this additional discount be reduced from the price at which the goods were sold and concomitant tax adjustments made? No. Okay, additional discount is non-deductible as it is not known at the time of supply. Whatever the discount may be, it should be known before the time of supply. If it is given in haphazard manner, the later on, that cannot be deductible. That cannot be deductible. You have to pay the tax on 70 only. For this also 70, for this also 70. This will be the transaction value on which you have to pay the tax. Now, Red Pepper Limited, Delhi, a registered supplies manufacturing taxable goods. It provides the following details of taxable interstate supply made by during the month of March. Okay. Now, list the price of taxable goods exclusive of tax 15 lakhs. This is the starting value for us. Subsidy received from central government for supply of taxable goods to government school exclusively related to the supply of goods included in number 1 item should not be includable, so you no need to add this. You no need to add this. Subsidy received from NGO for the supply of taxable goods to an old age home, non-governmental entity. Okay, this should be includable. So 50,000 should be includable. Tax levied by municipal authority except GST, all the taxes will be addable. Packing charges will be addable. And what about the final one? Late fee by the recipient of supply for delayed payment of consideration. Recipient has agreed to pay 6,000 in lump sum. The GST rate being 18%. 6,000 in lump sum for the late fee means it is assumed to be inclusive of GST. So then 6,000 into 100 by 118 only will be includable. Come on, tell me. What is the value? 5,085. Now what is the transaction value here? 80 or 90,000? Okay, clear. Hope you will be now able to understand. All these questions carries around 6 to 8 marks. Very simple, right? Shall I move on to the next one? Mrs. Flo Pro, a registered supplier, sold a machine to BP Limited. It provides the following information in this regard. Price of the machine excluding taxes and other charges. Yeah, you can take this 25,000 as it is. So this price doesn't include second and third item. Third party inspection charges. Such charges were payable by Mrs. Flo Pro, but the same had been directly paid by BP Limited to the inspection agency. Any payment to be made by the supplier but asked to pay by the recipient, then it should be includable only. So 5,000 should be includable. Freight charges for delivery of the machine not included here. Any freight charges should also be includable. So this 2,000 is includable. And subsidy received from the state government. State government subsidy, you no need to do any additions in this regard. Discount 2% is offered to BP Limited on the price mentioned in number 1 above. Recorded in the invoice. Recorded in the invoice is subtractable. So 2% on this being 500 rupees. This 500 rupees can be subtracted. Now the transaction value, the value of supply being 31,500. Clear? Next question. Sri Krishna Private Limited, a registered supplier, furnishes the following information relating to the goods sold by it to Sri Balram Private Limited. Price of the goods. This one excludes 345. Okay, you will start with this 1 lakh. Second being municipal tax other than GST should be includable. Inspection charges, incidental charges, so addable. Subsidy from Sri Ram Trust, not being government, so it should also be includable. And late fee for delayed payment, inclusive GST being 1,000 rupees. So what is the GST rate here? period given. So then you can remove exclusive of GST. Then 1000 can be directly taken. Weighment charges should be addable here. Now what is the total value? 1 lakh? 2000, okay. Ultimately waived here. I missed this, sorry. This one is waived. This one only on payment basis. So it is ultimately waived, no. So you don't need to add. So the final value being 1 lakh 69,000. Okay. Clear? Next one. Kohli Limited, a registered supplier, has supplied machinery to Gisha Limited. Price of machinery exclusive of taxes and discounts. So you have to start with 5 lakhs 50. Part fitted in the machinery at the premises of Giza Limited. Amount has been paid by Giza Limited directly to the supplier. So, however, it was Kohli Limited's liability to pay the said amount. The said amount has not been recorded in the invoice issued by Kohli Limited. In this is not includable. Of course, it should be includable as the amount payable by the supplier asked the recipient to pay means it should be includable. Installation charges not included, but it should be includable, so 25,000. And discount 2% on price of the machinery mentioned in serial number 1 above, recorded in the invoice. If the discount detail is given in the invoice, it should be subtracted. So from 5,50,000, 2% can be subtracted, so 11,000 can be subtracted. And Kohli Limited provides additional discount 1% at the year end based on the additional purchase of the other machinery, for which adjustment is made at the end of the financial year without any change in the individual transaction. Such information is not stated before the time of supply, so it is not going to be deductible. Now what is the final value? 5,84,000. Now, we will study 3 aspects here: tax invoice, credit note and debit notes. Let me focus first of all the tax invoice. If you are being the registered supplier, supplying any goods or services, you have to produce tax invoice. Unless you produce tax invoice, you cannot collect the GST from the recipient. Consideration being 100, GST on this being 18. So, if you want to collect 118 inclusive GST, you need to provide the tax invoice. If you don't provide the tax invoice, you don't have the rights to collect this 18 rupees. And for the recipient, if he is being the registered person, if he has the tax invoice only, this GST can be claimed as ITC. That too, he should be a regular registered person, not being the composition registered person or unregistered person. If he is being the registered person on showing the tax invoice only. So if he goes to the government, sir, give me the tax I paid for the input of goods or services or capital goods. Then immediately the department inquires about where is the tax invoice. So you have to give the documents. Unless you show the tax invoice, you are not eligible for getting the ITC. Similarly, if you are being the registered person, you cannot collect the GST from the customer unless you issue the tax invoice. So the tax invoice is mandatory. And how should be the tax invoice? You might have seen the tax invoice. So normally, whatever the company, a registered company issues any invoice, and the format looks like this one, right? If you purchase any AC or wet grinder, whatever it may be, from a registered person, they will give the bill. That bill will be started with a tax invoice. And this is what about supplier of the goods. This will be the recipient of goods. And you have the invoice date as well as invoice number. Apart from that, description, mobile phone and adapter, you need to give the HSN code. Already I explained what is called HSN code and all classification. How many quantities, what is the rate and what is the amount, total. With that, you need to add CGST rate as well as amount and SGST rate and amount, and you will get the total, grand total value here. And it should be signed by the authorized signatory for SSA Private Suppliers Private Limited Company. And it should have the amounts in words also. This amount will be available in words, and also in case of RCM, it should mention the RCM or forward charge also in the below. Is that okay? This is what about the tax invoice format. Particulars of tax invoice. What are they? Name, address and GST number of supplier. And consecutive serial number. Okay, this one. Invoice number. Okay. So how should that serial number be? Maximum 16 characters. And the number should be alphanumeric. And it may include special characters, especially hyphen, dash and slash. No other special characters will be includable. And unique for every financial year. So here I have stated this way, 2021. By seeing this itself, this invoice is related to 2021. So for each and every year, that invoice number should be uniquely identifiable. That's how the invoice number should be quoted. Number 2. Number 3, date of issue. Number 4, recipient is registered means mention his name, address, GST number also. So recipient's name, address and his GST number. If he is being the unregistered number, unregistered person, at least ask the address at least. Okay. Though you don't have the GST number, you need to ask phone number and address. If the recipient being unregistered, name, address, state and its code need to be asked. Okay. If the value is less than 50,000 rupees, sorry, the transaction value is more than or equal to 50,000 rupees, then you can ask. If it is less than 50,000 rupees, it is optional, may be requested. What is that? Name, address, state and its code may be requested. Is that okay? Now, HSN number. 6th point is all about HSN number. What are the supply of services, goods you render or supply you know, you have to quote its HSN number also, provided if your transaction value, annual turnover in the preceding financial year is less than 5 crores, or more than 5 crores. In case less than 5 crores and the supply being B2B supply, then 4 numbers should be shown as HSN code details. If it is between B2C, it may be optional. In case more than 5 crores, then B2B and B2C, whatever it may be, you need to provide 6 digits. How many digits are there for HSN number? 8 digits. The last class I told you. At least last 4 digits should be there. If the transaction value is less than, annual value is less than 5 crores, then if it is being the business to business, means you are being the registered person and your purchase is also be registered person. Okay, so you are also be a registered person, the buyer is also be a registered person, then your annual transaction value is less than 5 crores, at least 4 digits should be there. If recipient being consumer means he is not going to, may be a registered person, but he is not going to subsequently produce using it. Okay, he is going to consume, means he is not eligible for ITC. As he is not eligible for the ITC, and quoting that HSN number at least 4 digit is optional. And in case your transaction is more than 5 years, it is B2B or B2C supply, you need to have 6 numbers. Okay, 4 digits or 6 digits. In case of B2B, B2C, for annual turnover is less than or equal to 5C. If it is more than 5C, then 6 digits is required. Now, and description of goods and services, quantity, total value of supply, rate of tax, amount of tax, I explained that, right? So rate of tax and amount of tax, everything should be there. And place of supply, in case of interstate supply, from where you are supplying, if it is being interstate supply, one state to the other state, you are supplying from Tamil Nadu to Andhra Pradesh, then you have to state that in your tax invoice. Address of delivery, see, this will be the person buyer and the product is also be delivered there itself, then no problem. Sometimes purchaser may be this person, but he may asked to deliver to the other place, then delivery location should also be stated. Delivery location should also be stated. Is that clear? If different from the place of supply, then you have to give that detail also. Whether tax is payable on RCM basis or forward charges, that should also be quoted. That should also be quoted here. Signature or digital signature should be there of the supplier or his authorized representative should be there. Not required for an electronic invoice, but quick response code is needed. Having embedded invoice with the invoice reference number in it. Okay. So if you are issuing e-invoice, electronic invoice, e-invoice, you may attach a quick response code, QR code, okay, QR code in short, with the invoice reference number, then signature is not required. So we'll see that in the next lecture, okay. So we have that one also be discussed, e-invoice as well as QR code and all, how the QR code will be generated and what are the content will be there, all we study in subsequent lectures. So the particulars of tax invoice, it runs through almost 2 pages, but I have given the format. You no need to mug up. If you are able to understand this format, you can recollect all the content easily. Is that okay? Now, come on, tell me, how many copies should be there? So if you purchase anything, you will get how many copies? Usually 2 copies, sometimes it may be 3 copies, okay? So, in case of goods, you will have the 3 copies, okay. So, if you order in Amazon, okay, you will get the original document as well as another bill will be available in the during the transport in the package itself. That is called duplicate copy for the transportation. 1 copy is written by the supplier himself. That is called triplicate copy. So, you have the 3 copies. Original copy for the recipient, duplicate copy for the transporter, triplicate copy for the supplier in case of goods. But in case of supplier services, there is no transport of services, right? So it is only intangible form. There is no transport form. That's why we don't have the 2, 3, only 2. Original for the recipient and duplicate for the supplier. And serial number of invoices shall be furnished electronically in form GSTR 1 also. This number will be furnished in GSTR, written while filing the return, it should be indicated. We'll study the GSTR chapter later on, written chapter later on. Clear? Hope you'll be now able to understand these cases. Now let's see the bare provisions regarding the tax invoice and all. Bare provisions, okay? Section 31, class 1. Class 1 and class 2. We already referred these 2 sections along with the time of supply, isn't it? Time of supply, what is that? During the time of supply, in case of goods, time of supply for the goods, section 12 and 13 we referred. Okay. Invoice date as per the tax invoice we studied later on under section 31, or amount receipt date, whichever is earlier will be taken. So here we are going to study the time tax invoice date, right? Okay. Now, number 1, section 31 class 1, where registered person supplies the goods to the recipient, supply of goods. Okay, now 2 things. Whether the supply of goods involves movement or not. Movement or not. In case of movement, before removal from your place, you have to issue the invoice. In other cases, if there is no movement of goods, delivery are available in the hands of the recipient. Available in the hands of the recipient. We have referred these 2 already along with the time of supply case. Registered person supplies taxable goods shall issue tax invoice before or at the time of what? It involves movement of goods or other cases. If it involves movements of goods, removal of goods for supply will be the deadline. Before that, you have to issue the tax invoice. Other cases, delivery of goods. Delivery goods is nothing but making available to the recipient. It is available in the hands of, means it is assembled at the site of the recipient. Is it going to be taken out from our godown, or it is required to be assembled at the site of the recipient? If it is assembled at the site of the recipient, the moment he accepts, okay, it is perfect, I will take it. Until that time, you are not eligible for tax invoice. By the time, you have to issue the tax invoice. Now, what happens in case of registered person to the supplier, recipient, in case of supply of services? Come on. Are you able to recollect? In case of supply of services, before or after the supply of services, but within 30 days. Are you able to recollect this? Okay. Already we learned these two sections already we learned. Okay. Along with the time of supply. So you have to link the tax invoice and time of supply, both you have to link. How should be the tax invoice? Already explained what should be the format of tax invoice and content of the tax invoice also. Now, a registered person supplies taxable service will issue tax invoice before or after the provision of service, but within the period of 30 days from the date of supply of services. Is that clear? Clear? Now, one special case. In case of insurer, banking company, financial institution, NBFC and all, non-banking financial corporations and all, after supply of services, they have been given 43 days. Usually 30 days is the default in case of insurer, banking company, financial institution, NBFC. The 30 is replaced with 45 days. Is that okay? Now, note, an insurer, banking company, or financial institution, NBFC or telecom operator or any other cases making taxable supplies or services between distinct persons. If these parties along with the telecom operator or any other cases, if the supply happens between the distinct persons before or at the time of recording the supply in the books of accounts or expiry of the quarter during which the supply was made. So in case of distinct persons, so three things are there. One is default, which is 30 days. Another one is banking company, financial institutions, NBFC, insurer. In this case, 45 days. The another case, these specific persons along with the telecom operator or some other cases. If the supply is between the distinct persons, then what happens? Whenever you record in your book, by the time you have to issue the invoice or within the end of the quarter. Okay, quarter usually January, February, March will be considered as one quarter. If you render any services in January, before this quarter end, you have to issue the tax invoice. Okay, before the expiry of the quarter during which the supply was made. Is that clear? Three cases are there. Case number one, general. Case number two is for financial institution, banking company, and NBFC insurer. Case number three, distinct persons case. Distinct persons. Clear? Section 31, class 1 and 2. One is for the deadline for issue of the tax invoice of supply of goods. 2 is all about deadline for the issue of the tax invoice for the supply of services. Clear? So usually you have to link this chapter along with the time of supply. Time of supply. Is that okay? Special cases. You have to be careful with these special cases. Okay, this one, A, revised invoice. Now you have to understand registration chapter along with, so you have to link with the registration chapter. Clear? What registration chapter says, if your turnover is crossing 20 lakhs on 1st July, then within 30 days you have to apply for registration. Okay, you need to understand the registration chapter along with. Okay, what registration chapter says. 1st July 2025, your turnover crosses 20 lakhs. 30 days means 31st July 2025. What happens, you know, you apply for registration on 25th July 2025. 25 July 2025. Is that okay? Once you apply, it takes some time to get it allotted. So, you get the registration certificate on 10th August 2025. 10th August 2025. Clear? So, if you apply within 30 days from the date you are liable to register, then your effective date of registration, what is your effective date of registration? Your effective date of registration is the date liable for registration, 1/7/2025. 1/7/2025. Is that clear? Any doubts here? So they have given you 1 month time. 30 days time, within 30 days you have to apply for registration once you cross the 20 lakhs limit. So you crossed 20 lakhs limit on 1st July, by 25th July itself you apply for registration. And you got the registration certificate also by on 10th August. Then what is the effective date of registration for the calculation? It is presumed that you have registered on 1/7/2025 itself. Now, your turnover crosses 20 lakhs on 1st July, but you apply for registration on 2nd August 2025, and your registration certificate receipt date being 10th August 2025. Now what happens? You missed to register within the due date. Missed to apply for registration within the due date. If you missed to apply within the due date for this, your effective date of registration being the date when you get the registration certificate. The date when you get the registration certificate. 10/8/2025. 10/8/2025. Is that clear? Hope you will be now able to understand what the department tells you. The moment you are liable for registration within the 30 days from the date liable to register, if you apply for registration, you may get the registration certificate sometimes later, no worry. We assume that you register as on the date of liable for registration itself, 1/7 itself. But if you miss for registration within 30 days from the date liable for registration, then I don't consider the date liable for registration. I will consider only the date you receive the registration certificate. Clear? Clear? Now, if you are being the supplier and while issuing the supply of services, goods, whatever it may be, okay, the consideration being 100, you have to collect GST 18 rupees on this, 118. This will be possible only when you issue tax invoice, am I right? And this fellow can claim the GST or ITC only when he gets the tax invoice. For the tax invoice, you need to have what? GSTN number. So in your tax invoice, mandatorily you have to quote what? GSTN number. If you don't have the GSTN number, of course, you are not able to issue the tax invoice. Now, in this case, he gets the GST in which date? He gets the GST only on the date of registration. When he gets the registration certificate, on that date only he gets the registration. Means GST number. Now what happens the transaction between this date to this date, sir? Here he crossed 20 lakhs. Before he gets the registration certificate, he is sold for 5 lakhs. And applicable GST at the rate of 18% being 0.9 lakhs. Now the question is, will he be able to collect the 90,000 rupees? If he wants to collect, he has to issue what? Tax invoice. If he wants to issue tax invoice, he needs to have GST number, but in this case, he doesn't have the GST number. Liable to register date to date of registration certificate receipt date. During that period, he doesn't have the GST number, but he has to collect the GST. How? The problem arises. In this case, you know, you issue some dummy bill. Once you get the registration number, from the date of registration number within 30 days, 10/8 from that date, 30 days means here 21, another 10, 9th September, okay. Within this date, you can issue fresh tax invoice for this. Dummy bill you issued, no, collect those dummy bill and issue the fresh tax invoice with the GST number printed on this. So then you will be eligible for collecting the GST from the customer, and the customer also can get the ITC out of that. Is that okay? The bill you are going to issue fresh for the old bill, you know, is called revised invoice. Within 1 month from the date of registration, means from this date, for the invoice already issued, whatever the document already issued, instead of that, during the period beginning effective date of registration. What is the effective date of registration? From this date till the date of issuance of registration, this date. In this date, whatever the transaction happened, dummy bill is there, no, you replace the dummy bill with the revised invoice. That tax invoice will have the revised tax invoice in the title. But what happens in this case, sir? No, he loses that benefit. In this case, if you miss to register within 30 days, you are not eligible for revised tax invoice. Then this GST cannot be collectible, but you have to pay out of your pocket money. That's a burden you have. Hope you will be now able to understand the. So hope you will be now able to understand the concept revised invoice. You can issue the revised invoice within 1 month from the date of registration for the invoice already issued during the period beginning with effective date of registration till the date of issuance of certificate of registration you can issue. Now, whenever the value of supply is less than 200 rupees and recipient being the unregistered person, okay, unregistered person, means tax invoice is not required for him. In this case, tax invoice is not required to be issued, but you can prepare a consolidated tax issue. If you go to any stationery mart, you can purchase the pen, note and all this value may be 50, 100 rupees for each and every 50, 100 rupees preparing the tax invoice and uploading all those documents while filing the return of income will be, while filing the GST return will be really complicated. In that case, if the recipient is not in the need of tax invoice, he need not to issue what? Tax invoice if the value is less than 200 rupees. Collectively for all the value put together in the day end, he can prepare one consolidated tax invoice. Is that okay? May not issue tax invoice conditions. Value of supply is less than 200. Recipient is unregistered and tax invoice is not required by him, but you have to prepare CTI, consolidated tax invoice, at the close of each day, every day. This option is not available for admission to multiplex screens, cinema theatres, multiplex screens. Similarly, in case of interstate supplier, CTA cannot be issued in respect of all unregistered recipient if the value of supply exceeds 2.5 lakhs during this period. Overall value is more than 2.5 lakhs, they cannot issue CTA. Clear? Now what about bill of supply, sir? Bill of supply is nothing but from the supplier to recipient, whatever the tax supply is there. If he is being the unregistered person, then he cannot issue taxable tax invoice. As he is not able to issue the tax invoice, he has to give some document, that document is called bill of supply. Or if the supply being exempt supply, in case of exempt supply also tax invoice will not be required. Then he can simply issue bill of supply. So tax invoice is mandatory only when you are being the registered person and providing taxable supply. Okay, if you are being the unregistered person, you don't have the GST number, tax invoice is not possible. If invoice is not possible, you have to give some document, that document is called bill of supply. For supplying exempted supply, as well as paying tax under composition levy. In case of composition levy also, the person who registers for lower tax rate payable. Okay, we have already studied composition tax payer. 2.5% for caterer. In case of other than catering service, 3% and 0.5% and all we have studied manufacturer and trader. For those people, they are not eligible for issuing the tax invoice. They can issue composition scheme. Of course, if the value is less than 200, yes, of course they can. They need not be issued the bill of supply, similar to this one. Now, Jain and Sons is a trader dealing in stationery items. It is registered under GST and has undertaken the following sales during the year. None of the recipient required tax invoice. Raghav trader being composition dealer. Raghav trader being composition. No one needs tax invoice. Determine in respect of which of the above supplies Jain and Sons may issue consolidated tax invoice instead of tax invoice at the end of the day. Raghav trader is registered, though he is being the registered, he is being the consolidated tax payer, composition tax payer, okay, composition dealer. Okay, means he is not in need of what? Tax invoice, okay. Anyhow, he is being the composition taxpayer, I'll just keep it pending. Dhruv Enterprises and unregistered trader, so two conditions should be satisfied. Unregistered person and then the value is less than 200. In this case, first condition okay, second condition pending. So, you have to issue tax invoice. Gaurav, a painter, unregistered, but the value is not within 200 rupees, so you have to issue tax invoice. Oberoi Orphanage, an unregistered entity, value is this one. So, unregistered person, value is also within 200 rupees, so you no need to issue the tax invoice, you can issue consolidated tax invoice for the day end. Aradhya, a student unregistered and value is also less than 200, so here not required, so you can issue consolidated tax invoice. These two transactions can be clubbed and you can prepare only one consolidated tax invoice in the last. Okay. In the first case, though he is being the composition taxpayer, he is also registered, so we cannot consider he is being the unregistered. So value is okay, but anyhow you have to issue the tax invoice. Sultan Industries Limited entered a contract with the Prakash and entrepreneurs. Sultan and Prakash. Supply of spare parts of a machine on 7th September. This is a contract date. The spare parts were to be delivered on 30th September. Delivery being 30th September. Sultan Industries Limited removed the finished spare parts from the factory on 29th September. Removal. 29th September. Determine the date by which invoice must be issued. If removal is applicable, the removal date is final. Otherwise, you have to go for the delivery date. So 29/9 will be final. The aggregate turnover of Sangari Services Limited exceeded 20 lakhs on 12th August. Date liable for registration. Liable for registration. 12th August. He applied for registration certificate on 6th September. Apply for registration on 6th September. Now what happens here? Applied within 30 days. And you are required to advise Sangari Services Limited as to what is the effective date of registration. What is the effective date of registration? Maybe registration certificate it gets later on, doesn't matter, but anyhow, 12th August. It has also sought your advice regarding the period for issuance of revised tax invoice. Okay. So we assume that applied on 6th September and he got the registration also on the same day. Then from the date, within how many days he can apply for revised tax invoice? 30 days. 6, 9 and 30 days means now September month 30 days, 6 is over, 24 is there, still another 6 days, you can take 6/10 being the cut-off date for claiming the, issuing the revised tax invoice, 6th October. Shyam Fabrics has opted for compensation levy scheme in the current financial year. It has approached you for advice whether it is mandatory for issue a tax invoice. You are required to advise him regarding the same. Tax invoice not possible. Tax invoice can be issued only by whom? By the regular taxpayer. Composition taxpayer, where he is not eligible for collected GST as well as any persons purchasing from him also not eligible for ITC, so tax invoice cannot be issued. Now, Royal Fashions, a registered supplier, designer outfits in Delhi, decides to exhibit its products in fashion show being organized at Hotel Park Royal, Delhi on 4th January. For the occasion, it gets service by way of makeover of its models from Aura Beauty Services Limited, Ashok Vihar, for which consideration rupees 5 lakhs excluding GST has been charged. Aura Beauty Services Limited issued a duly signed tax invoice on 10th February showing the lump sum amount rupees 5,90,000 rupees inclusive of CGST and SGST at the rate of 9% each for services provided. Okay, answer the following questions. When the service is completed? 4th January. When the tax invoice is issued? 11th February. In case of supply of services, what is the due date for issue of tax invoice? Provision of services plus 30 days only allowable. Here what happens? 4th January, 10th February, it's more than 30 days, definitely has not issued the tax invoice as per the requested date. Then time of supply should be 4th January only, okay. Examine whether the tax has been issued within the time limit prescribed under the law. No. What is the law? 4th January means only 30 days limit is there. In January 31, 4 days over, so 27. So 27, another 3 days is there. So 3rd February will be the due date for the issue of the tax invoice in this case. Tax consultant of royal fashion subjected to the invoice raised suggesting that the amount of tax charged in respect of taxable supply should be shown separately in the invoice raised by RR Beauty Services Limited. They have shown the consolidated amount like this 5,90,000. You should not show this way. How to show? Amount and CGST, SGST and its applicable rate and its applicable amount and gross amount. That's how you have to show. So they have shown directly 5,90,000 rupees. Now the question is it correct or not? However, RR Beauty Services Limited contended that there is no mandatory requirement of showing tax components separately in the invoice. You are required to examine the validity. So the valid statement is what the Royal Fashion objected is correct one. Okay, they have to show it separately, not in a consolidated manner. Need to show CGST and SGST separately along with its own rate also. Is that okay? Rana Sangha Limited, a registered supplier, has the following taxable supplies to its customers Barber in the quarter ending 30th June. Goods in respect of bill number 102, 230, 254 have been returned by Barber. You are required to advise Rana Sangha whether it can issue consolidated credit note. No, we'll see that later on. Now, Chittanand Products Private Limited is registered supplier who has apted composition levy in the current financial year. He wishes to know whether the issue of bill of supply can be dispensed with under any circumstances. We are required to advise. Composition levy scheme. In this case, that supplier should issue bill of supply when the bill of supply is not required, when the transaction value is less than 200 rupees, then bill of supply is not required. A registered person has a mandatorily issue separate invoices for taxable and exempted goods when supplying both taxable and exempted to an unregistered person. Okay. Examine the validity of the statement. So, supplier, okay, recipient, while supplying that, there is a taxable supply as well as the exempted supply. So he wants to show tax invoice for this one and for this bill of supply. Is it correct? No need. You can show both in single tax invoice itself. Tax invoice is mandatory. You have to state the tax amount separately for this, but here the tax will be named as exempted. That's all. You no need to issue separate bill for taxable supply as well as exempted supply separately. Clear? A non-banking financial company can issue a consolidated tax invoice at the end of every month for supply made during the month. Okay. So for the NBFC, they can issue the consolidated tax invoice by the period end. No problem. It is accepted only. Sakti Enterprises Kolkata entered contract with Suraj Enterprises. Sakti to Suraj. For supply of goods and delivery shall be made on or before 31st October. This is only contract date. The goods were removed from the factory at Kolkata on 11th October. Removal date being 11th October. As per the agreement, the goods were to be delivered on or before 31st October. This is the only agreement date. Leave it. Suraj Enterprises has received the goods on 14th October. Received on 14th October. Determine the time of issue of the invoice. Time of issue of invoice is always removal date is final. If the removal is not determinable, then delivery date will be taken. Trust and Fund Limited, an event management company, has provided its services for an event at Kapoor Film Agencies, Mumbai on 5th June. Payment for the event was made on 19th June. Determine the time of issue of invoice. In case of taxable supply of service, you know, from the date of provision of service, within 30 days you can issue. So June 30 days, 5 days over, so 25 days is there. For 30 days another 5. So 5th July will be the date of issue of invoice and amount received being 19th June. 19th June. Anyhow, what is the due date for issue of the tax invoice? 5th July. 5th July. Hope you will be now able to understand first 4 aspects here. Okay, section 31. First one is all about, class 1 is all about taxable goods case. Second one being the taxable services case. Third one being the revised invoice. And fourth one being the special cases. Bill of supply case we have completed in the third case. In special cases, revised invoice not required, means tax invoice not required case, bill of supply case. Now we still have few more aspects, D, E, F, G. I try to finish off all these things now. Okay. Supplier, recipient. Supplier and recipient. Supplier may, contract is entered between these two. Contract is entered between these two. Okay. As per the contractor, recipient paid an advance amount. Paid an advance amount. On receipt of the advance, supplier should give receipt voucher. Should give receipt voucher. Clear? And then scenario 1, scenario 2. What happens in case of scenario 2? Supplier could not fulfill the order, can refund this. In that case, refund voucher will be issued. Refund voucher. Or if supply is done, then what happens? Advance is going to be adjusted with the consideration by issuing the tax invoice. By issuing the tax invoice. 3 scenarios. While receiving the advance amount, you give him a receipt voucher. If you are not able to fulfill your commitment and later you are supposed to refund, then you have to issue the refund voucher. You fulfill the commitment and then this advance is adjusted to the consideration, means it should be adjusted along with the tax invoice. Should be adjusted with tax invoice. Issue of receipt voucher on receipt of advance payment. Issue of refund voucher if advance payment is refunded due to what? No supply or no tax invoice. Okay, you may have no supply or you no need to issue tax invoice. In those cases, you have to refund this. Invoice under reverse charge, then we'll see the later on. This is what about the tax invoice. Okay, these are the 3 scenarios we've discussed here. No supply or no tax invoice. In case of tax invoice, it will be adjusted with the tax invoice. We have completed D and E. In case of receipt voucher, you know, you are not able to find out what is the nature of supply of services or goods going to be done and what is the tax rate applicable for that. A default tax rate 18% will be taken. If you are not able to find out whether it is within the state or outside the state, the default will be considered being interstate supply. In case of while receiving the advance, no, you are not confirmed with the what is the tax rate and whether it is interstate or intrastate. Okay, rate of tax is not determinable on receipt of advance, then the tax rate being assumed to be 18%. Later on it is adjustable. Nature of supply is also not determinable, then it is assumed to be interstate supply. Now we will move on to the next one. What happens in case of invoice under reverse charge? F and G are same. F and G are same. F and G. Okay, supplier, recipient. He is being the unregistered person and he is being the registered person, and supply of services or goods happening, then taxable under RCM basis. RCM basis. Who has to raise the invoice? Supplier gives only a small document. That document is not evidence for claiming the ITC paid. If I purchase from the registered person, I will get the tax invoice. Based on the tax invoice, whatever the tax I paid while purchasing can be refunded as ITC. But under RCM basis, I myself pay the tax, Can I issue the tax invoice myself? Yes, you can issue the tax invoice yourself. So you can issue the tax invoice by yourself, keeping some document, bill of supply as a evidence. So issue invoice under reverse charge by registered recipient. Who has to issue the tax invoice? Recipient, he himself issues the tax invoice. Unless he has a tax invoice, he is not eligible to get the ITC. Okay, in this case, supplier cannot collect and pay the tax as he is being the unregistered person. I myself pay. Then there should be a document for the payment of GST, no. And this tax invoice is not raised by supplier, means I can raise myself. On the date of receipt of goods or services or both, supplier is not registered, means he can issue himself. And apart from that, in addition to that, for this, recipient should pay consideration, For that, he has to collect the payment voucher also. Issue payment voucher for the above at the time of payment. These two are interlinked. Okay, advance receipt voucher. In case of refund, it is coming under RCM basis. Under RCM basis. Now, in case of in case of continuous supply of services or goods, where we will start with continuous supply of goods. Continuous supply of goods. Okay, and continuous supply of services. These are the two cases you have to study. What is called continuous supply of goods? Already discussed that also, along with the electricity. You start consuming the electricity every day, every moment. Okay, without electricity you cannot be idle, right? So immediately you need the power bank and all to store. Okay, at least mobile you need. Understand? Electricity. Now for January, February, valuation is done for the tax value of supply being on 5th March. Supposed to pay on 25th March. At the time of payment from February end to this date, you consumed no. Is there any amount payable for that? Supply remains continuous, but you will pay based on the billing date as per the contract you entered with the supplier, electricity department. Okay. Involves successive statement. This electricity company says to you, so bi-monthly once, every second week will come and give the bill. You have to pay me in the 4th week. So that will be the deadline. Within that date, you have to issue the tax invoice. As per the terms of agreement, what is the billing date? Okay, if you top up or if you go for a mobile recharge, month on month, exactly that same date they will raise the bill. 5th, the next month 5th they will raise the bill, you have to pay. As per the contract, the date will be there, that is called statement date. So such a statement date is not missing, available, sir, from the contract. Periodically, if you are releasing any payment, before that payment date, you have to raise the invoice. Is that clear? So two things are there. In case of continuous supply of services, supply of goods, if it involves successive statements before or at the time of statement, if such a statement information is not given in the contract or agreement between supplier and recipient, and successive payment, I may pay once in every January month, every month beginning, sir. Whatever it may be, don't compel me, I'll pay once in every month, usually in the first week. Before I get the payment, the tax invoice should be issued. So one is, if there, as per the contract, if there is a statement given, means the date for billing is given, then that is final. If it is not so, payment date. Before that, the invoice should be raised. In case of continuous supply of goods. Similarly, in case of continuous supply of services, mobile will be continuous supply of services. Mobile is a continuous supply of service. Water connection you have in your home, continuous supply of services. That supply will be continuous. But monthly once, exactly last date, bill will be ready and you have to pay in the third week. From the last week to the third week, you still consume the water and other things. The service is enjoying, but still, okay, the billing date will be as per the date. Okay, what's that? If the due date is ascertainable in the contract, then before the due date. If it is not ascertainable, then payment. Similar to the same. But one extra thing is there. What is that? Sometimes it is based on completion of contract. Okay. It is a continuous supply of service, sir. 3 months or 4 months later, both are recipient and supplier mutually cancel the contract. So the contract gets completed by 4th month. Immediately after that, immediately after the date of completion, you have to issue the invoice. Three situations are there. As per the contract, if there is any date ascertainable for the billing purpose, okay, you can take, otherwise payment date. And sometimes if you are suddenly cancelling the continuous supply, what happens? So you may subscribe for 1 year. Any YouTube or Premier version or some Netflix and all you subscribe. Suddenly 3 months later you want to cancel. Okay, the continuous supply of service cancelled today means at the time of cancelling, invoice should be raised. Is that okay? 3. On or before the date of completion. On or before the date of completion. And 6th one also same. Supply of services ceases before the completion. Ceases before the completion. Already told 1 year contract, but 3rd month itself I cancel. So then what happens? Up to the 3 months, what could be the value? That value will be considered as taxable invoice value, and you have to raise the tax invoice up to that value only. Before the cessation. The 7th one being sale on approval or written basis. Supplier, recipient, supply of goods, stating that you consume this goods, sir. Once you satisfy, you confirm that I am satisfied, then I'll raise the invoice. Okay. So in that case, on his confirmation only, the supply is confirmed, you have to issue the invoice only on his confirmation. For example, 1st January 2026, you are sending the goods. He gives the confirmation on 15th March 2026. Then tax invoice should be raised on confirmation. Supplier and recipient, supply of goods happens on 1/1/2026, but recipient confirms on 15th September 2026. What happens, sir, in this case? There should be reasonable time, you confirm or written, there should be reasonable time. The reasonable time is only 6 months. From that 6 months being 30/6/2026. If the confirmation beyond this date, exactly by the end of the 3rd month, it is considered as sold and tax invoice will be raised. Okay. So invoice shall be issued in case of sale on approval or written basis. Invoice shall be issued whichever is earlier of, on or before the time of supply. Before the time of supply means is confirmation. If confirmation comes after 6 months, then 6 months from the date of removal. From the date of removal, 6 months will be the time, or is confirmation between these two, whichever is earlier will be the date. In that date, you have to issue the tax invoice. Okay, 7 aspects. We have completed all these things. We have completed all these things. Now, Section 31A deals with the digital payment to the recipient. Okay, so all the payment is made through online, no? So that facility should be given. That's what about the rules here. Now, particulars of tax invoice, you know, in case of online money gaming and ECO services. Okay, in these two cases, invoice requirement being the registered supplier must include state of the recipient in the tax invoice. Mentioned state shall be deemed as an address on the record. The address of the user, as per the record, you know, that will be considered as state of the recipient. Okay, if the recipient being in Tamil Nadu, he has given all the details, address proof and ID proof from Tamil Nadu, but he enjoys the services in Andhra Pradesh, still considered as Tamil Nadu only. Is that okay? As per the record, what they have will be final. This rule is applicable irrespective of the value of the supply. You have to give the invoice even for 1 rupee, irrespective of the value. Irrespective of the value, in case of online money gaming as well as ECO services. Now, invoice. If your aggregate turnover in the preceding financial year is more than 10 crores, you have to issue e-invoice. You cannot issue printed form. You have to issue e-invoice only. It must issued by a notified person. Notified person means registered business or PAN based aggregate turnover. Is that okay? This fellow should issue one e-invoice. An e-invoice schema is created by taxpayer on their own accounting billing ERP system as per e-invoice schema containing mandatory fields form GST invoice 1 INV1. Okay. See, whatever the things you make it ready, you know, you have to file this as a return to the government. Okay. While uploading these documents, no, that GST and portal requires some of the fields. Those fields should be in your ERP system. Whatever the software you have, no, in your software, you need to have these fields. If you take an Excel sheet, in Excel sheet, name, address, phone number, if you want to create a database. Similarly, if you want to create the e-invoice, whatever the fields required as per the GST and requirement for the e-invoice, you need to create in your means the software. Okay. If you have your own ERP system or billing system, whatever it may be, there are lots of billing softwares available, you know. Okay. Most of the cases there will be a billing machine. When you purchase, you will get the bill printed in the billing machine. The billing machine will have all this scheme. Okay, therefore. Now, supplier, recipient, supply of service or goods, supply of service or goods. He is being the registered person, that too his turnover in the previous financial year, not previous year, previous financial year more than 10 crores, should create the tax invoice first of all. Tax invoice, create tax invoice, step number 1, create tax invoice. Where? In his own billing software, as per GST INV1, invoice 1. Okay. See, for all these things, no. For all these things, you know, already you have complete set of formats. So you have the formats. Are you able to see this? GST or REG 1, 2, 3 represents registration forms. Okay, CMP composition scheme related forms, registration forms. ITC related form, input tax credit. GSTR, goods and services tax returns form 1, 1A, 2, 2A, 2B, 3. We'll study all these things. PMT represents payment. RFT represents refund. So all these forms are there, available already. Okay. This one, form GST INV1. What are the schemes required? So this is a schema. Whatever the billing software you make it ready, you know, should have all these things. Should have all these things. Okay. Description of the field and all these things, you need to follow this procedure, this model. Clear? So you create as per the GST invoice 1 format in your billing software. Second being, you have to upload that in IRP, invoice reference portal. Okay. IRP. And this IRP generates IRN. Okay. Invoice reference number. Clear? So, invoice registrations portals are available for uploading your drafted invoices. Almost 10 portals are available. 10 portals are available. Invoice registration portal GST for the e-invoice system. Here you have to go and upload your invoice first of all, stating all the required information, what is the value and what's the rate applicable and all, and then you'll get IRN generated from that. You'll get IRN generated. Is that okay? So the tax invoice what you have created, you need to upload that to the IRP. IRP now gives an identification number for that is called IRN number, invoice reference number. Fourth, IRP digitally signs the e-invoice and add QR code. This IRP itself adds a digital signature and generates QR code. Now, fifth, IRP returns this e-invoice to supplier. Sixth, this one will be sent to recipient. Supplier shares this e-invoice. So, e-invoice is nothing but the invoice what you prepare in printed form, no, not valid. You have to create a e-invoice using your own billing software as per GST invoice number 1 format and upload that to the IRP. Now the IRP will take the responsibility to assign the number for that special number and generates e-invoice and adds a QR code. And that information is sent to that supplier. This supplier now has to send this to the recipient. You stated the value being 1 lakh. Tomorrow you cannot cheat this because everything is automated. It is now already in the government's hand. For whatever the sales you do once, each and every time, once you do the sales, immediately it is intimated to the government. Unless you have these documents, it's invalid. R cannot cheat and S cannot also cheat later on, but it is not applicable for the small players, small assessees. Sir, I send all these things, sir, but because of some reason, the supply is not fulfilled, sir, cancelled, sir. Can we cancel? Yes, of course. The reported invoice can also be cancelled later on, allowed by seller by reporting IRN and IRP with specified time. Cancellation of reported invoice. Of course, you are allowed to amend this one also, amendment of reported invoice, possible only on GST portal, but possible through IRP. Okay, through the IRP only you can go to amend all these things. So you now, so invoice reference number, e-invoice reported to invoice registration portal. We have almost 10 portals for registration purpose because there may be crowded traffic, sometimes there will be internet traffic, you cannot upload. To avoid that, so we have almost 10 portals. IRP will generate unique invoice reference number and return the e-invoice. GST invoice will be valid only with the valid IRN. Invoice reference number should be there. If you don't have invoice reference number, that is invalid. And of course, this is the workflow and you can cancel and you can amend through the IRP itself or GST portal. Via GST portal, you can do it. And when the e-invoicing is applicable, supply of goods or services are both to a registered person by a notified person. Who is a notified person? The person who has aggregate turnover more than 10 crores in the preceding financial year is called notified person. Okay, who is called notified person? 10 crores. Okay, notified person to registered person. Notified person to registered person, then applicable. Notified person to export case, applicable. Supplies made by notified persons, tax on which is payable under RCM. Notified person supplies, but RCM is applicable. What about the e-invoice scenario? By the time also applicable. In these 3 cases, e-invoice is applicable, mandatory. In case of B2C supplies by notified person, okay, notified person, recipient being, okay, customers, okay, consumers, final consumers, not applicable because he is not going to claim the ITC. If he is not going to claim the ITC, of course, this e-invoicing process is not required. Invoice issued by IST, input service distributor, not applicable. IST. I will explain the IST concept later on. You now remember IST. Okay. Input service distributor not required to raise the e-invoice. Where specific category of supplies are received by notified persons from unregistered person. Attracting under 9 class 4. Okay. Which is RCM basis, not applicable. Okay. 9 class 3 applicable, 9 class 4 not applicable. Okay. So 9 class 3 means notified person supplies the goods, but RCM is applicable. In case of 9 class 4, unregistered supplier. Okay. Here may be registered person or notified person or unregistered person. In these cases, RCM is applicable. Then this is coming under section 9 class 3. That's some specified items. But in case of section 9 class 4, if you are getting it from unregistered person, if you are being the registered person, then RCM is applicable. In this case, the supplier being the unregistered person, no, automatically GST will not be, means e-invoice is not applicable. In case of import also not applicable. Only for the three cases e-invoicing must. Okay, B2B by notified person and export by notified person and 9 class 3 RCM by notified person under section 9 class 3. In these three cases e-invoicing is mandatory. Now, some cases e-invoicing is exempted even if the turnover is more than 10 crores. In case of special economic zone and not being the cess developer, then e-invoicing is not required, and insurer, banking, financial institution, for them e-invoicing is not required. GTA service provider not required. Supplier of passenger transportation, person supplying services by way of admission to exhibition of cinematograph film or multiplex screens. In these cases, e-invoicing is not required. Special economic zone, okay, cess. Okay, some zone named as special economic zone within India, anything manufactured there usually transported to or exported to foreign country will be called as special economic zone. For them, the e-invoicing scheme is exempted. Insurer, banking, financial institution not required, and transport of goods as well as transport of passenger. Another one is cinema theaters. In those cases, e-invoicing is not required. And what is the advantage of e-invoicing, sir? Okay, so auto reporting, auto generation of e-way bill, and substantial reduction in transcription error. You will study that later on. Whatever the transactions you do know, you have to intimate to the government, return filing. But if you are doing this through IRP, invoice reference number, those things are automatically updated to the government's website. You no need to worry about that. You no need to fill yourself, right? So you study this along with the GST written in the later classes, not here. And early payment, cost reduction, improved efficiency, reduction of tax evasion, elimination of fake invoices. So these are the advantages. And no requirement of issuing invoice in duplicate and triplicate. So you no need to issue 2 copies or 3 copies because everything is documented in electronic form, digital form. Is that okay? And what should be there in QR code? In QR code, all the things required for the tax invoice will be available. What are they? GST of supplier, recipient, invoice number, date of generation of invoice, invoice value, number of line items, how many items are there, and transaction values, HSN code and unique invoice reference number. Okay, date of generation of IRN, everything will be there in the QR code. After that, you just simply send the QR code to the recipient, that is the invoice for him. Easy reference. Now, if your aggregate turnover in the preceding financial year is more than 500 crores, then you need to issue the dynamic QR code on B2C invoices. Okay, if your transaction is more than 500 crores, you need to issue dynamic. Dynamic means it's changing. Okay, invoice is static, but dynamic means it's changing. How? So in case of sale worth rupees 50,000 rupees, I send the QR code. If you scan, the amount also printed there itself. You don't need to type the amount. Okay, when you scan our QR code, we will say 500 rupees, you pay 500 rupees or 1000 rupees, you have to type 5,000 rupees or 500 rupees and then make the payment in your UPI or whatever the mode may be. But in case somewhere if you scan, the amount pay will also be displayed there itself, that is called dynamic QR code. To enable and encourage digital payments where the buyer can scan dynamic QR code and make the payment from mobile wallet directly. Those facilities will be there directly. It will be added to your mobile wallet, and the value also be already printed. This is called dynamic QR code. This dynamic QR code is required only when your transaction value in the preceding financial year is more than 500 crores. And this dynamic QR code not applicable for what? The same scenario what we have learned earlier, insurer, GTA, passenger supply and cinematograph film. In addition to that, OEDR services also. For that also, this dynamic QR code not required. Okay. No dynamic QR code in case of exports. need to issue e-invoice by a registered person for export, treating them as B2B supplies. In case of B2B supplies, in case of export, he has to issue the e-invoice but requires no QR code. So when you are going to export, you get the collections only in foreign currency. So if you are issuing the dynamic QR code, then it may be in terms of rupees, there will be confusion. So you no need to issue the dynamic QR code for the exports. And content in QR code to be scanned to make the digital payment. For the digital payment, supplier GST and supplier UPI ID, pay bank and all these things will be there. Okay. To make the payment convenient, these data will be available there. Now, let's see. A taxpayer, say a firm of advocates having aggregate turnover in financial year more than 20 crores, is supplying services to a company who will be discharging tax liability as recipient under RCM basis. Such invoices have to be reported by the said taxpayer since it's a notified person, IRP. Okay. So here, firm of advocates. To whom? Company. Value is more than 20 crores. Then definitely you have to prepare IRP under section 9+3. Under section 9+3. Because advocate service comes under section 9+3. Okay. Not unregistered supplier. Maharaj Private Limited has a cess unit. In case of cess, of course, e-invoice is not required. And a regular DTA, they have cess as well as DTA, domestic tariff area. So in India, certain place will be named as cess unit. Others are called as domestic tariff area. Whatever the things you manufacture in cess is usually exported, and you have the other unit in other places. The GST will be applicable all the places, not here. That's why the rest of India other than cess will be called as domestic tariff applicable areas. Domestic tariff area. He has one unit in cess, another unit in DTA. Usually he will not pay the tax for cess, but he has to pay the tax for DTA. Both having the same PAN. The aggregate total turnover of Maharaja Private Limited is more than 10 crores, considering both GST numbers. However, the turnover of DTA unit is below 5 crores. Here, the turnover is less than 5 crores. But if you add up these two, the total being more than 10 crores. In this scenario, cess unit is exempt from e-invoicing. However, e-invoicing will be applicable to DTA unit because the aggregate turnover of the legal entity in this case is more than 10 crores. So, you no need to prepare e-invoice for this, but you have to prepare the e-invoice here because aggregate turnover means turnover for the entity. PAN-based turnover will be taken. PAN-based turnover means all the turnover inclusive of export turnover as well as the exempted turnover also will be taken. So here, aggregate turnover is more than 10 crores, definitely e-invoice is must, but e-invoice is must not for cess. So leaving this, you have to issue the e-invoice for the DTA entity. Okay, DTA entity. So we have completed Jain and Sons already. Let's deal with the delivery challan. Delivery challan is issued on removal. An invoice may be issued after delivery. Okay, in that case, delivery challan may be issued. Clear? For example, A, and here's art gallery. A being the artist sends his artwork to be displayed in the art gallery exhibition. While moving from his place to this place, it is not supplied. When the customer visits and checks and satisfies to take it, then only supply happens. But if the goods moving from one place to another place, if there is a supply, then tax invoice is raised. But if it is not being the supply, what happens then? You cannot issue the tax invoice. Yeah, of course, it's not bill of supply also. Bill of supply means supply. Okay, you are not being the registered person, but you are giving the bill, then it's called bill of supply. If you are being the registered person, if you are giving the bill, then it's called tax invoice. But it is not supply at all, but the goods are moving from one place to the other place. See, whenever the goods moving from one place to the supplier to the recipient, supply of goods, original will be sent to recipient, duplicate will be in the hands of the transporter, and triplicate copy will be in the hands of the supplier. When the goods are transported in the lorry, in the check post they will verify whether the goods are really purchased, transferred or stolen goods. They will ask for the bill. So that the transport agency should have, the GTA will have a bill, no, that bill called duplicate bill. Then what about the bill? It's only tax invoice. This is original tax invoice, this is duplicate tax invoice, this is triplicate tax invoice. But in this case, it is not actually tax invoice, right? Because it's not supply. If you are sending the goods in the lorry, in the check post, the investigator, the police will inquire, what about this one? Okay, is it stolen one, sir? No, sir. Sold one? No, sir. Then how will we be able to answer? Sir, it is going to be displayed in the gallery. And you have to give me some document. That document is called delivery challan. That is called delivery challan. Clear? Issued on removal, but invoice may be issued after delivery. After delivery means after sometimes on real sale the delivery means invoice may be issued or invoice may not be issued. If it is returned without sale, then invoice will not be received. Cases where delivery challan is issued. Supply of liquid gas where quantity at the time of removal from place of business to the supplier is not known. So gas is sent. Okay, see the petrol. Petrol comes and in the petrol bank they will fill. We are not sure how much petrol will be sold or filled in the petrol bank. They will come with 10 lakhs liters of petrol. In the petrol bank they will fill around 7 lakhs or 7.5 lakhs. Only 7 lakhs or 7.5 lakhs is considered as sale. So by the time it is removal, so you have to give the delivery challan. On filling, the sale will be confirmed and tax invoice is raised. Okay. Transportation of goods for job work. While sending the goods for the job work, of course it is not really sale, it's only transportation. So you have to give the delivery challan. Transportation of goods other than by way of supply, it is not being the supply, but some reason it is moving from one place to the other place. If you are sending all the equipments and rigs and all for repair purpose, then you need to give a delivery challan. Such other supply may be notified. In these cases, delivery challan will be issued. Delivery challan to be issued. Serial number not exceeding. See, the delivery challan format is similar to what? Tax invoice only. But it will not have the tax invoice in the top, but it will be named as delivery challan. Date, number, GST number, UIN number of consignor, consignee, HSN code, quantity, taxable value, tax rate applicable for that. Everything will be there, but named as delivery challan, not the tax invoice. Whatever the tax invoice particulars will have in note, the same will be available here also, but named as delivery challan. And how many copies are there? 3 copies. But of course, we don't issue the delivery challan for the supply of services. In case of services, we don't have the delivery challan. Only for the goods we have, so we have 3 challans here. Clear? Now, declaration in e-way bill. If goods are being delivered on a delivery challan, it should be declared in e-way bill also. Okay, sometimes tax invoice is issued after delivery of goods. Now, goods transported in SKD and CKD condition or in batches or lots. SKD and CKD is nothing but semi knocked down and completely knocked down. The materials are not sent in single assembled piece. It's a big plant and machinery. The components required for the plant and machinery may be transported in 10 or 15 lorries. Okay, every lorry will come with some small portions only. So if you are sending a lot of, say, 15 lorry full of components, right? Now what you have to do? In the very first lorry, you send the tax invoice for all the components put together. For the second lorry, how can you issue the tax invoice every time? So here in subsequent cases, you have to issue the delivery challan. So after getting all the components, you will assemble. For example, if you want to construct a cement factory, for the cement factory, you need to have the rotary kiln and all. That rotation makes the concrete mixture, right? So all these things are rotary kiln, right? So for the installation of rotary kiln, you will get all the components transported by 10 or 15 lorries, even truck. But invoice will be issued comprehensively only once for all the components put together. And the materials are transported in semi-knocked down or completely knocked down format. It may be assembled later on. In that case, supplier shall issue complete invoice before dispatch of the first consignment, so first lorry. The supplier issued delivery challan for each of the subsequent consignment giving the reference to the invoice. So this is the invoice. Here, delivery challan with the reference to the tax invoice. That's how rest of the lorries will go. Okay. Copies of the corresponding delivery challan shall accompany each consignment along with the duly certified copy of the invoice. There is a certified copy of invoice. The original copy of the invoice shall be sent along with the last consignment. So this is a duplicate for the transporter, and the last will be original copy will be sent along with the last copy. Means last consignment. That's the procedure in case of CKD SKD. Is that clear? Now, suppliers of jewelry, artists supply artwork. Already explained now for the exhibition. Okay. Goods may be moved within the state from the state of registrations to another state for supply on approval basis. Artwork may be sent by artists to galleries for exhibition on delivery challan along with the eBay bill. Okay. Supplier should carry invoice book with him and issue once supply is fructified. Once the supply is confirmed, only then tax invoice is issued. Already we discussed. Section 32 and 33 are not required because for the coherency I have added. If you are being the unauthorized person, unregistered person, you don't have the rights to claim or collect the GST, and unless you have the tax invoice, you cannot collect the tax also, and you have to indicate all these things in your tax invoice. These are the two other points not required for your purpose here. So with that, we have completed tax invoice and delivery challan in detail. So credit and debit note will continue in the next class. Okay.